Hello everyone and welcome to today's video. Sorry I haven't done a video for a while. I've been really busy. I actually didn't trade at all real war paper for about a week just because I was too busy, and then last week I traded some real money. Had a decent week, ended green for the week. I can't remember what trades I made, but I'm going to try to get back in the swing of things here. I made a trade this morning in my real money account on Apple calls right at the open. This is my paper trade account, remember. So I bought Apple calls right at the open. I pull up my other screen on my other computer. I bought them at 9:30 and 15 seconds, so it was literally just about when the bell rang. And I'll show you why I was confident. You see we had a pre-market, it gapped up pretty good from after hours yesterday, and it maintained these highs. It kind of stayed along those highs, and I was watching it pre-market hoping it wasn't going to break out before the market opened, and it didn't, so that was good. If it would have broke out back here, the only thing I could have done was wait for it to pull back and bounce, but it just so happened that when it was building right here, it kept building, it kept testing this pre-market high, and I kind of knew once it broke it, it was going to go. I was pretty sure once it broke it, it was going to go. So I bought the 225 calls, this week's 225 calls, right at the open. As soon as it, it was pretty much as soon as it opened, it broke above these pre-market highs, and that's when I jumped in. I paid 85 cents a piece for them. I only bought two because it is riskier. A lot of times it'll pop up, this first candle will pop up and it'll come back and sell off. So I wasn't real sure what it was going to do. So I sold the first one at 99 cents. So made 14 cents, $14 on that first contract. It's not much, but when you consider, when you look at percentages, it was 16%. I sold that one at 9:31, so not even a minute into it. And then I sold the second one at, I actually had three contracts. I didn't have two. I had three contracts, paid 85 cents for all three. I sold the first one at 99 cents. I sold the second one at $1 at 9:30, just before 9:32. And the reason was because it came up here and then it started to pull back a little bit, and I figured I better get rid of, I like to have got rid of at least half of my contracts on the first pop. If it's a decent enough pop, and this was, like I said, 16%, and I'd only got rid of 1/3. So I sold the second one at $1. I think I actually had a sell order in for like $1.05, and it didn't quite hit it. And I was afraid of the pullback here, so I went ahead and sold the second one right at $1. So I was out 2/3 of it. I had one contract left. I sold that one at 9:34, which was right after the open, and it was actually right about here when I sold it. I sold it for $1.17. So in the end, you take those averages, it's like 24%. 117 plus $1 plus 99. My average exit was 105.33 minus my 85 I paid, divided by that 85, 24%. So I made 24% on the Apple calls this morning, real money. Unfortunately, it was only three contracts, but like I said, when you're trading the open like that, it is a little more risky, a little more aggressive, so you don't want to go in too big. The second trade I made was Apple again, and that was a paper trade. You see here I bought Apple calls at 10:31. So we're over here. The reason I bought them at 10:31 was just after the open of this candle. We came down, you see the VWAP right here. This is VWAP. We came down, we tested the bottom of the cloud. We kind of poked below it and bounced right here. It kept fighting to come back up. Right here it popped back above it. It popped up even higher right here, so I went ahead and entered. I figured we'd get it run at least to here, which would have been good for at least 10% for me. And I actually bought 10 contracts at about $1.04, I think it was. 10 contracts at $1.04, so I spent $1,040. I sold the first third, or three of them, at $10.55, which was right here. And the reason why was right after the open, actually right after the open of this candle. The reason why is because we started hitting the daily high. We got close to that. I wanted to be out of some of them before we got to there, so I got rid of three of them. I sold three more at 11.03, which was, you see right here, we came up to this pivot point and we started to struggle there. So right at the open of this candle, we had a bigger body candle here and a smaller body here that kind of struggled with this pivot point. So I got out of another three right here. So I sold 6 of 10, and I sold those for $1.25. So I was up a pretty good chunk already. I sold two more at 11.10, which was right here, and that was because not really any real reason. I just wanted to get out of a couple more just in case it pulled back. So I sold two more at 11.10 and I sold one at 11.40, which was right after the open of this candle. We kind of struggled a little bit right here, losing momentum, and then we started to pull back, so I sold one right here. So I only had one left at that point. I only had one contract left at that point. I set a stop order on a close below the 21 EMA, which happened over here. So the last one sold at $1.89 at 130. And you see right there, close below, and the next candle it sold. So right here it sold right at 130. My net, you see it made $283 on $1,000, so about 28% net. We can figure it out here. One at 189, one at 147, two at 135, so it's 270. Three at 125, so it's 375. 3 at 114, so that's 342. 10 contracts. So my average exit was $1.32. I paid $1.04. So 27.2% on that one. So I made 24% real money at the open and 27% a little bit later. A good strategy, at least for me, when you see a runner, and I wouldn't necessarily call this a runner, it was just a nice uptrending day. It's not like it took off and shot to the moon right at the open, but it was a nice uptrending day. You have a nice uptrending day like this, look for pullbacks. People, it comes up here, people start to take profits. It comes down and holds a support level, look for that. Now right here, my stop, conservatively, probably would have been a close below the 21 EMA because I was in so big. I was in for almost my full account. I only have $13.92 in this account, and I went in for over $1,000. So, and I made $300 on that trade. So I only had a little over $1,000 in it. So I went all in pretty much. Now it is a paper trade account, so you can kind of get away with doing that. But you just want to be careful doing that. You can do it with real money if you have a tight stop. Like I said, if this would have been real money, my stop, even with the paper trade, my stop probably would have been a close below this 21 EMA. Now you could say you could have your stop down here, which is pretty much this low here and pre-market highs. You know what? I didn't update this. Let me check. I didn't update this chart because when I was trading, I was actually watching the other charts. Let me see where pre-market highs. Pre-market high was at 221 exactly. So let's move this to 221. Let's do it this way. And pre-market low was 219.88. Okay, so these will be actual numbers. We had a lot of support here at 221. I don't think I would have let this go down that far. Maybe what I might have done, since I had 10 contracts, if it broke below the 21 EMA, maybe sold half of the contracts. Maybe if it broke below here, sell a couple more, hold on to maybe 2 of them for down here. And then if it holds here and looks like it's going to reverse, then I could start buying back. That's the beauty of having, working it out with your broker, that to where you don't pay a flat fee. Like I said, I pay a per contract fee, so it doesn't matter if I sell one at a time or sell them all at once. It's still the same. I can sell here on the way down. I can buy back down here. It doesn't cost me any more money. But that's what I've been looking for. If you're going to play this way, if this is your style, and this is the style that I used when I took my $2,000 paper trade to $7,000 in 2 months. This is primarily what I used. I looked for, let's say right here. Well, let's look at something different. Let's look at Boeing. Because Apple didn't really show what I looked for. Let's say trying to find something. Let's just pretend that there's a resistance point right here. Let's pretend we have a resistance point here. We'll make this red. Okay, let's pretend there's a resistance point, pivot point, something, pre-market high, something. And we come down below it and we come back up. And I start getting reversal candles. We have bullish or bearish engulfing here, bearish engulfing here. This is what I would look for. And my stop would be a close above this resistance point or above the top of whatever the highest candle is right in this area. So my stop would have been a close above 380.83. So I would have went in right here on puts. I would have added puts probably right here. See, it came back up and tested, and there you go, it flushed. I probably would have sold most of them right here at this pivot point and let a few ride. Right here, I probably would have been all out, even though it came back up. And that's a strategy you can, if you have enough contracts, you can wait till it comes back up and see if it breaks this resistance point. If it doesn't, good. You can either add more or just ride it down to here. But that's the kind of strategy I used when I took the $2,000 up to $7,000. I had tight stops. My stops were rarely more than 10%, but I didn't have bigger winners either. My winners weren't quite as big. So I might start going back to that again, trying that again, which is kind of what I did with Apple, but it was to the upside. But excuse me. And actually, you see this point here, right here was the lows back here. So there was a little bit of support right here. It was actually a pretty good support. I wouldn't be surprised to see it curl down and start selling off a little bit here too, because of this support resistance line. But that's kind of what I look for. Let's go back to the Apple chart, and I'll show you kind of what I saw that matches up with that. We came down. We had a VWAP here. We had a cloud here. And I got something in my throat. VWAP in the cloud. It came down and it kind of held that level. And it was a pretty tight stop right here, especially if my stop was the bottom of the cloud. Pretty tight stop. So I would be comfortable going in with a lot more money, a lot more contracts. If I stop out, I think my max, the lowest I was down on 10 contracts was like $80. I don't think I was down any more than that at any point. But yeah, you can go in when you have a tighter stop like that. You're going to have a little bit lower winning percentage, but you're not going to have as much, as big of a loss when you do stop out. But that's what I was looking at. I went in 10 contracts, $1,040 total. I rode it up to last one I sold out of was right here. So I sold out at about 224. I got in at about 221.50. So I rode it up $2.50, which is pretty good. I mean, I didn't ride all the contracts that far, but I did ride one that far. Um, so just another strategy, something else. I mean, um, mainly the three strategies I'm playing right now, or I guess you could call it four, was this trade here, pre-market, right at the open. Look for something that's trying to break through the highs pre-market, and it's held those highs. And then right when it breaks at the open, jump in. Be prepared to get out quick though. Another strategy is like I just said right here. When it holds at least two support levels or resistance if you're looking for puts. When it's holding those two, you go in with a tight stop. That's another strategy. Another is right here. You could have entered. You had a bullish engulfing candle, came down to support at the bottom of the cloud at 21 EMA with a bullish engulfing. This would have been an entry point. So that's a third different strategy I have that I use, and that's pretty much it. That's like the three main strategies that I like. Reversal candles off of support levels right here. Pre-market and playing the open when it's holding those levels of pre-market, and one that had a nice run. There was no reason for it to reverse here. Sure, it can still reverse, but there was no news or anything like that, so no real reason for it to reverse. You jump in, you keep your tight stop, and you sell off along the way. That's kind of the three strategies that I've been looking at, that I've been playing, that have been working the best for me. So thanks for watching. Try to keep doing videos every day. Things are real hectic right now with work, so I can't focus too much on it. But anyway, thanks for watching, and hopefully I'll see you tomorrow with another video. Thanks. Bye.